Good afternoon and welcome back to the Brazil, Canada at PDAC 2021 15th edition. I am Carolina Albernas, CEO of the Brazil, Canada Chamber of Commerce, and will be your MC today for our next session, exclusive Brazil, Canada Capital Markets Roundtable that will talk about the latest trends and opportunities to attract capital and finance your projects. We'd also like to thank all our sponsoring companies for the trust and support, our platinum sponsor Vale, our gold sponsors ALS, Apian Capital, Brazil, EGC, Aero Copper, Nexa Resources, Serabi Gold, and Wheaton Precious Metals, and our silver sponsors 4B Mining, Amarillo Gold Corporation, Baker McKenzie, Belusan Mining, BMA Law, Brookfield Asset Management, Sescom Barrier, CBPM, Equinox Gold, GE21, Consultoria, Geosol, Great Panther Mining, Horizonte Minerals, Jaguar Mining, Kinross Brasil Mineração, Landing Mining, Promon Engenharia, Sigma Lithium Resources, Toronto Stock Exchange and Toronto Stock Exchange Ventures, and Valor Metals. And last but not least, our partners, Embassy of Brazil in Ottawa, the Consulate General of Brazil in Toronto, Global Affairs Canada, and Protiva Results. So we have a packed agenda today. So without further ado, I would like to invite our first speaker of the session, Joaquim Muniz, partner at Baker McKenzie in Brazil, to perform the opening remarks and present on opportunities in Brazil. Joaquim, welcome. Thank you for being here today. It's a pleasure to welcome you again.
Thank you, Carolina. It's a huge pleasure to be here virtually with all of you. Unfortunately, it's the second year in a row in which, due to the pandemic, I cannot travel to Toronto. I heard that I bring the bad weather. I heard that today the weather is wonderful. Not as good as in Rio, like it's a very shiny and hot day in Rio, but I heard it's 7 degrees Celsius. Sorry for using the Celsius, but that's the background. But it shows that the sun will shine. Eventually, the sun will shine. Like we are living in very difficult times. It's quite sad that we are going through the second year of the pandemic, and of course that affects all markets, including mining. At least mining is much less affected than other areas of the economy. And with respect to some minerals in the last 1.5 years, like iron ore, the price has been going up. Iron ore with a lot of volatility, but it's not performing badly. So I could say that among all the activities in Brazil, maybe the mining activity is the one with a brighter future ahead, the one with the greatest opportunities. And that's why we should do what we are doing here. We should see the crisis as an opportunity and see how can we invest for the future. If we are here in this very difficult moment, I'm sure that in 1 year, 2 years, things will get much better. But to make the best benefit, you have to take the investment decisions. You have to make proper compromises right now. Know that there are a lot of controversy and discussions about Brazilian economy and Brazilian politics. But if you see that's my 10th year in a row that I've been speaking here at PDAC. And if I take like the last 5 years with all the hurdles in Brazil, I can clearly see significant improvement. So I'll do a little bit of background so that you can understand why I think that the mining sector in Brazil is getting much better, and not just a matter of the price of our main mineral commodities, but also on regulatory framework, considering that I'm a lawyer. We see like 5 years ago, Brazil finally reformed its mining code. So on one hand, the bad news that it increased the value of royalties charged, but less than some people expected. But the good news is that the legislation became more modern, and we finally set up mining agents to the ANM, national mining agents, to replace the NPM, the former department that was not very resourceful. Uh, After that, we started to change all the regulation, to review all the regulations, starting and the first one to review the decree uh, on mining that regulated the mining code with more modern provisions, such as to make easier to get disponibilidade, to get DUP, the eminent domain, to do mining projects, and also to regulate the issue of the available areas. And after that, I think this process of modernization was slowed down for two reasons. First, the Brumadinho incident in early 2019. So all the everyone turned to tackle the environmental issues, especially ANM that enacted a series of regulations for dams, especially downstream dams, to close down them in a very short time frame. So we lost a lot of time to fix these environmental issues. And the second point that slowed down the development of the mining regulation in Brazil was, of course, as from early 2020, the COVID-19 pandemic. But if you think about the COVID-19 pandemic, it affected less the mining industry than the other industry. And I will say so for two reasons. First, mine activity were deemed to be essential activities in Brazil, so few mines actually stopped operations during the pandemic. So contrary to what happened in other activities like other kinds of constructions, the mine activities as a general rule continue to be carried out. And second, we had a positive moment in the market from the price of our mineral commodities, but still, of course, the beginning of the pandemic was a moment of instability. We saw a lot of litigation, for instance, claims of force majeure about activities had to stop, or people that could not go to work because they were sick, certain allegations of hardship on contracts that the price went up. But we see that at the end of the day, things we expected this kind of litigation to be more frequent and bigger than they really were. I think that it shows some level of maturity of the Brazilian market. The stakeholders sometimes negotiated several agreements and managed to keep the business going. At the same time, we could see a trend to push to offer new mining opportunities in Brazil, and I would highlight three steps forward. The first was the regulation of what we call the available areas, like the areas that the Brazilian government receives back after you have some problem with the no approval of the research or the return of the production. Brazil, at the end of last year, did the first public round of those available areas that will have more than 150 areas being put at a bid and being acquired by new mining companies. And this process went on again at the beginning of this year. We're in the middle of the second round with a much larger amount of mining rights being in the second round of available rights. The first one were the mining rights were less valuable, and mostly they dealt with construction minerals, which was like a test. Now they have better mining rights being put to bid, and the intention of the government is to do that uh, from time to time. So every year or every 6 months to have a new round of available areas so that we can bring more investment in the mining sector. The second good news is that a number of mining rights that belongs to the government were included in the Brazilian privatization program. And you have the first uh, mineral complex that was the one in Palmeirópolis that had zinc, copper, and gold and plumb was privatized at the end of 2020. And now we have the bid for um, two other mining rights, one of phosphate in Mirili, another in of copper in Bom Jardim. There are big mining projects that they will be privatized by mid 2021, showing some commitment from the government to bring more investment in the mining rights. And we have been in ANM, the Brazilian Mining Agency, was created. It's under a little bit of controversy about the human resources, and ANM needs more people, needs more money, but I'm confident that it will eventually happen, that now that it is being set up, as time goes by, it will make the hiring of or more people and have the resources to do a quicker analysis of the mining for granting of the mining rights. And what it sees that NNM is doing a very interesting program to review the regulation, to make the Brazilian regulation more mature. So we are doing, I know that there's some frustration in Brazil because you have some level of political instability, and we are doing in baby steps, if I could say so, the institutional improvements, but I could clearly see those improvements in the last 5 years. And I strongly believe that now that we'll have a very positive cycle, at least is expected in terms of the mineral commodities that Brazil have, together with could I say, a pro business political environment. My expectation, maybe because I'm Brazilian and Brazilians are always hopeful, that once we have this issue of the COVID-19 tackled, and it's a matter of time. It's very sad that we are in the peak of the second wave of pandemic right now. So I'm speaking for the lowest point of this crisis at this moment. But I'm pretty confident can look up and see a very good horizon once we cross this desert. And I think that's the biblical passage is a good analogy. Like we are walking in the desert, but I can see the oasis. We can see the way out. I think once we get out of the pandemic, once things get normalized, there are a lot of investment opportunities in Brazil. We also see a trend in go deeper in the privatization. So not only on those sales of mineral rights, but also in terms of railways, roads that will help with the infrastructure. So in the middle terms, I think the future is bright. We cannot see the situation from the middle of we're at the middle of the desert, but we are getting out. And I think that's the right time to invest. So this roundtable, normally we have a lunch, and that's strange to speak, to be like a keynote speaker in a lunch that nobody's eating because that's virtual. But those are the new times. But I'm quite flattered that we still have a very significant audience here that shows the important role the Brazil plays, and why Brazil is still a very bright spot for investments, a place to put your money. So having said that, I pass the floor on to Carolina because to introduce the next speakers that will speak the most important things, where to invest in Brazil.
Thank you, Joaquin. Thank you for being here today. Thank you for the words. There's definitely a lot of infrastructure projects happening in Brazil. So I'm glad to have you here giving a little bit of overview. So I'd like to next invite, so we're gonna do share a presentation from Dean McPherson, Head of Global Mining at the Toronto Stock Exchange and Toronto Stock Exchange Ventures, who will share a little bit of overview of what happened with the TSX in the past year and what's come to the future.
Thank you. Good afternoon, and thank you for having me. Always a pleasure to participate in this event. I look forward to it every year. It's of course disappointed that can't be there in person this year. I suppose we are all disappointed, but such are the times. Hopefully next year for sure. So every year, I'm always honored that you guys invite the Toronto Stock Exchange and TSX Venture Exchange, because our relationship with the Brazilian chamber is so significant, of course, because Brazil is such a significant part of our global strategy, being one of the, if not the largest economy. You can correct me if I'm mistaken to think that you're not, but Brazil plays such a central role and a leadership role in Latin America that our relationship is very important to us. So we're always happy to participate in these events and share with you what's happening in mining, because of course, mining is also a significant part of our commonality and what we have, our common interests in seeing the growth in Latin America. So a capital opportunity last year was quite significant, surprisingly, on both the Toronto Stock Exchange and TSX Venture Exchange. And what I'll do here is just sort of remind us why we are the leaders in mining, why Toronto Stock Exchange and TSX Venture Exchange are considered leaders in, and certainly by any metric, leaders in mining, in global mining. Our first advantage is that we're located in Canada, which certainly stands out across all measures to be a good location. Location is everything in economics and in finance. Location is quite significant. So we are stable. We provide world-class financial institutions and provide confidence and economic stability for our participants and our stakeholders. How do we rank? We're the fourth largest stock markets combined globally when it comes to equity capital. Over the past 5 years, close to 240 billion Canadian dollars were raised in Canada, and that puts us in terms of ranking fourth behind the United Kingdom and ahead of what I would consider in mining our most significant competitor, the ASX, the Australian Stock Exchange. Last year, all companies on our markets, this is beyond mining, raised $43 billion on both the TSX and the TSX Venture. Digging a little bit further into our markets, we have 3,289 issuers combined across all sectors. Again, we're not zooming into mining yet, but just to give you an idea of our marketplace and the size of our market, we have 3,289 issuers in our market. with a combined market cap of 3.5 trillion Canadian dollars. All dollars in this presentation are Canadian dollars. Last year, 167 billion shares were traded on our markets, and we hosted 300 going public events. And go public events meaning IPOs, qualifying transactions, etc. You'll see later on why I highlighted the differences here. And as I said earlier, $43 billion was raised, equity capital was raised to our markets across all sectors. One unique element of our marketplace that is quite significant for mining in particular, but also for other sectors, is our TSX Venture Exchange, or two-tier market system, where we provide the right size, the right structure, and right capital access for companies really across all stages. We offer senior, more established companies a platform that's very suitable to them on the TSX, the Toronto Stock Exchange. In addition, we have a very active TSX Venture Exchange, where we bring together investors and companies at the right stage, and companies at the growth stage, and investors who are looking for companies at the growth stage. And there's a unique element to our venture market. One could say that there are other venture markets, there are other junior markets. In London, for instance, there is the AIM. In New York, there is the American, NYSE American. What's unique about our marketplace is that our venture market is quite active, quite significantly active. In fact, last year, trading on the venture was equal trading on the big board. And you'll see often mining companies sometimes will prefer to start their journey on the venture before going up to the big board, which often is not a long wait. This slide, you'll see it takes about, from our measurement, about 4 years before companies graduate to the big board. And oftentimes a lot of companies will take a long time, even after being ready to graduate, to wait around and spend some more time in the venture market, where they enjoy customized regulatory regime. They enjoy investors who know small markets, who know their business quite well and know mining quite well on the TSX Venture Exchange. And as I said, eventually companies graduate to the big board, where they become eligible for global and S&P TSX index products, opening companies up to a broader group of investors, really. I mentioned earlier, the previous slide, about the depth of our venture market and how active it is. Since we acquired the TSX Venture back in 2000, and back in the year 2000, 700 companies have graduated to the big board. 32% of all current corporate TSX companies are actually TSXV grads. So that's a third of our TSX listed companies are graduates from the junior market. So we're quite proud of that. That's a direct reflection of how active our market is. And companies just don't start on our venture markets and die. They tend to grow. And we're very proud of that record, as I mentioned earlier. Another significant point to mention here is that 19% of S&P Composite Index constituents are actually graduates from the TSXV. So I think those two stats are quite impressive. And as I said, it points to the depth of our marketplace. Where we are a global marketplace, we are located in Canada. I mentioned that we have a significant advantage of being located in Canada, in Toronto, Canada, headquartered in Toronto, Canada. But we're a global company. Not only do we have offices in London, in Vancouver, across Canada, we have representatives across North America. We have full-time representatives in Latin America as well, when we added Guillaume Laguerre, who originally was in Brazil, now based in Lima, but covers Latin America in general, across all sectors for us. So we are a global focused company, and we are a global company. 40% of our daily trading originates from outside of Canada, and 25% of our member firms are headquartered outside of Canada. So while we're located in Canada, we have a global reach, and we do provide the gateway to global investors, and global companies come here. So the mining sector, going down into the mining sector now, which is Many people say that mining, Toronto Stock Exchange and TSX Venture Exchange is all mining. We're not actually, but I'm working on that. Hopefully we can get more mining companies here and outdo our other sectors that we have, but we have a quite diverse market. However, mining still remains close to 50% of companies that are on our marketplace. And I expect, based on the year we had last year, and certainly over the past 2 years, I think we'll continue to see mining reclaim a larger percentage of companies on our marketplace. On a global scale, though, we continue to be the leaders in mining. 52% of mining financings that were done last year were done, that were done over the past 5 years were done on our marketplace. Last year, global mining equity capital was on both our marketplace was over the past 5 years was 44 billion $44 billion in equity capital was raised by mining companies over on the TSX Venture Exchange here. So it's significant because it shows that 37 cents of every dollar raised by mining companies over the past 4 years, from 2016 to last year, 2020, 37 cents of every dollar equity capital raise was done through our markets. Quite significant. Our leadership in the sector is unchallenged, I would say. You'll see later that we're way ahead of our nearest competitor. I talked earlier about the ecosystem that we have here that starts with our two-tier marketplace. 53% of TSX mining issuers graduated from the TSX Venture. You know, earlier I talked about a third of our overall TSX companies are graduates. It's even more significant when you look at mining. Close to half of the mining companies on our senior board started their journey on the venture market. So, you know, while the venture market is important for all our issuers, for mining, it's even more important. In 2020, we added 5 mining graduates from the venture, and as I said, we had a total of 2020. We have had a total of 300 grads so far since we started tracking numbers from the TSX Venture. I spoke earlier in the previous slide about the performance of our markets over the past 4 to 5 years, and quite impressive. Last year, you know, we talk about what happened last year. 43% of public mining companies are listed on our exchange, and this is data as of the end of last year. So close to half of the number of public mining companies globally are on the Toronto Stock Exchange and TSX Venture Exchange. The ecosystem that we have here, I think, is sort of a symbiotic relationship with that stat, because as a result of our dominance in mining, and our ecosystem has grown to the point where we have 200 plus analysts covering our sector. And on our markets, the average number of analysts covering mining companies, it's 6. So six capital market professionals with knowledge of our sector providing interpretation and guidance for investors, both institutional and retail. So, and this is not to mention the wider ecosystem that includes stakeholders like the legal advice and accounting advisors that are quite knowledgeable with the mining sector, in addition to the bankers that support the market sector, and as well the nonprofits that provide support to our companies and our communities that we operate in. So quite a very active ecosystem that we have created here, and I think you know, we built a market here that hosts close to half the world's global publicly listed mining companies, and as a result, we have the ecosystem that supports that, and so we certainly hope to see that continue. In terms of what our market focuses on, you know, we talked about that diversity in our reach, in the sense that we're a global marketplace. We also have diversity in the commodities that are represented in our markets here. You know, this is our market, of course, is dominated by the precious metals. Gold, as you can see from this slide, gold represents 51% of commodities focused on by our issuers. but also base metal, uranium, and certainly a lot of battery metals are quite handsomely represented in our marketplace, and people who are familiar with our market have never experienced or never seen any cycle that we have not been able to host and help our companies access the capital they need to grow. And so that continues. I touched on reach earlier, and this is this slide here. I particularly like this slide because it shows this global footprint that we have that stretches from Canada, where we have 53% of our issuers' properties represented in Canada, and this stretches all the way to Russia, where we have properties represented. Our issuers have properties and operations in Russia. So the entire globe is represented here. Latin America is quite significant, of course. Outside of Mexico, Canada, and the US, Latin America is our next significant market, South America. So if you consider Mexico and South America, which I often do, maybe not correctly so, but you're talking about 19%, almost a fifth of our almost 20% of our properties represented on our markets are in Latin America. So a significant focus for us. And as I mentioned earlier, we have full-time representatives on the ground in Latin America across all sectors, to be honest, not only mining, but of course, mining is the primary focus. So digging a little bit deeper into Latin America, and of course, Brazil, you'll see here, Mexico is the largest representation here, but, and certainly we have Brazil behind. So there is some work to do, but we think that there is certainly, the opportunity certainly is there, and our relationship with Brazil is only growing. Last year, we signed a memorandum of understanding with Ibram through Guillaume's relationship in Brazil, and we expect that our relationship will get even more significant. So I expect that you'll see more than 36 companies represented soon in Brazil. And so 36 is the number of companies that we have listed on our exchange, with focus in Brazil. And I'll dig into that a little bit further here. But overall, Latin America, 410 Latin American issuers. When I say Latin American issuers, I mean issuers in our marketplace with significant operations, significant exposure in Latin America. And those companies raised 2.9 billion last year. And last year, we added 10 new listings with projects in Latin America. So with over 1,000 properties. Brazil in particular, with these 36 companies I mentioned, you'll recognize a lot of these names. We're quite happy about the performance of many of these companies, and as I said earlier, there is room to grow. And I think based on our pipeline and certainly the traction that we're seeing, we think that this number will continue to grow. These 36 companies raised 246 million last year in equity. And these are these 36 companies with projects in Brazil, and we average analyst coverage, as I mentioned, it's 6, as so right in line with the average for our markets, and just under 100 properties are represented by these 36 companies. So, this slide sort of give you an idea of where are we here? Here we are. Sorry. Yeah, so this slide sort of summarizes our international focus, and we have market cap for the TSX and TSX Venture for international companies just over 115 billion market cap for a number of international mining companies on us, and we're, in the context of the overall market beyond international companies here, we're talking about just over 521 billion in terms of mining companies market cap on our marketplace. We have a total of 1,000 146 mining companies on our market. And this is for both the TSX and TSX Venture. So you see, mining is still a significant part of our business. I mentioned at the start that the TSX overall across all sectors has over 3,200, so 3,200, just over total companies. Mining represents just under a half, 1,146 companies. So a big part of our business, and certainly a big part of our the leadership in this particular sector globally is unparalleled, as I mentioned. So what happened last year? It was we had, of course, a horrible pandemic that put us all locked us all at home for quite a while, and brought us here. But also, what happened was that with the mining sector, to everyone's surprise, I would say, quite outperformed our S&P TSX composite index that tracks mining and metals was up over 23% for the year, and this was compared to our broader index, which was just over 2% in terms of performance for the year. So all our indices that track mining, our S&P TSX Global Mining Index was up close to 24%. Significant numbers. We were quite surprised but happy this rapid rebound. Of course, when the pandemic was announced in just after PDAC, and we had a lockdown across the globe, the markets reacted as one would expect with uncertainty, and we had this. You can see there, right between February, just before the end of March, there in 2020, we had that collapse in the market. So all indices are reflecting that. What most people didn't anticipate was the recovery, and we had a record collapse, so we also had a record recovery, which is amazing. And of course, led by precious metals initially, but base metals joined the fray quite after as well. And of course, we've seen a rebound across all sectors, and across all commodities. So it was amazing. It was a good year, to say the least. 57 new mining listings in 2020 amongst the 100-year pandemic. Mining companies raised 7.5 billion, and that 7.5 billion was on the back of over 1,600 mining financings last year. I mentioned trading on our TSX Venture last year equal the TSX, the big board, which was significant because it shows activity and shows participation in the TSX V. 57.3 billion shares traded on both the TSX and the TSX V last year as well. And we saw the return of I would say generalist investors is the term you want to use to the marketplace. That's so it was a significant year. So far this year, we're 2 months into this year, and the pace hasn't slowed. We have seen increased activity continue in the marketplace. Another standout last year was the addition of Australia's largest gold producer, Newcrest, joined our markets, and they're of course listed in Australia on the ASX, and according to the company, their objective with joining our market to add in a TSX listing is to gain exposure and to gain access to international investors. So again, speaks to the leadership of our marketplace and the ecosystem that we have here, that if you're a global mining company looking to grow and provide return for investors and access capital for that growth, you need to be listed on in Toronto. Another significant addition last year was an IPO, Gatos Silver, which is a silver producer with properties in Mexico. So that did a dual listing with us and NYSE and New York Stock Exchange. So very good year. you can see from the chart here, as I mentioned, outperform in all indices outside of mining. Our global mining index outperform, our metals and mining index outperform. So very happy about it, and very happy to see a lot of that activity being done on the venture. You know, we've had spikes before in previous years in the mining sector, but the focus was always on the bigger, larger producers. Over the past 3 years, 4 years, what was significant about last year was that the junior mining sector rebounded and came alive, and companies were being financed at a rapid pace. Most financings were oversubscribed. So, and as I said, that activity has not slowed 2 months into this year. So our pipeline is showing that we'll have a good year as well. And certainly all forecasters are saying the same in terms of the macroeconomics in a post-pandemic world. So, or a pre-post, I suppose. So just to finalize here, our markets and who we are, as I mentioned, total capitalization for mining companies in terms of Canadian dollars is just over 540 billion. And, you know, compared to London Stock Exchange, AIM, ASX, you can see here that our leadership is significant. In terms of last year and financings that were done, and new listings, you can see that we had almost twice the number of new mining companies joining our markets compared to ASX, which is 27, nearest competitor. So we're almost twice the number of financings done. We have 1,146 mining issuers on both our markets. The nearest competitor would be ASX at 665. So moving on. So the advantage of TSX and TSXV, just to summarize here, what are the benefits of joining our marketplace in the Canadian regulatory regime? I talked at the start about being located in Canada and the stability and predictability that provides us, and that provides our marketplace, but it also provides issuers with comfort in operations and the way they go about their business, being a less litigious environment. And a regulatory regime that we have in Canada certainly supports mining companies, and certainly I talked as well about the support across all sectors. So not only support for producers, but also significant support and a framework and ecosystem for junior and exploration companies as well. So this provides access for North American-based investors to North American-based investors in terms of proximity and time frame as well. This is one of a significant issue that's often overlooked, but that I come across often when I travel across time zones. Issuers will tell me that they will look to us, they look to North America first to get to that large pool of institutional investors and retail investors, which by general estimate is about 5 times the outside of North America. So it's the capital, it's the capital of capital, if you will. One would ask, why wouldn't they just list in the US for all the reasons above? Stability and predictability in Canada, the litigious environment that we have that gives boards and CEOs comfort that their companies won't be attacked by frivolous lawsuits. The regulatory environment that we have. So we are a gateway. We are a gateway to North American-based investors, which happens to be the largest pool of investable capital globally. Other issues that we have, other advantages that we have is the innovation that we provide to in our marketplace. The bought deal structure is another example of that, I think. And it's attractive to mining companies because what it does is give you a very fast and efficient, lower risk access or means of access to capital. And in these times in particular, timing is important. It's important that you access windows of capital I mentioned last year a window opened up, and most of the deals that were done in the marketplace were bought deals, reducing the risk for issuers and allowing you to quickly access capital, in case ugly volatility returns, and close that window quicker than expected. But fingers crossed, it's been almost a year and it's been going well. And of course, the leadership. You're joining a market that is the leading marketplace. So naturally, investors will look to our market first for opportunities across all stages. So if you want to be seen, as I mentioned earlier, Newcrest's primary objective was one of their primary objective was to gain visibility as they seek to grow and to gain access to investors in this part of the world. So, which happens to be the largest pool of investors. So, the leadership that we provide is significant. This pool, having the largest pool of mining companies for investors to look at, you need to join the pool. And of course, I mentioned the support that we give across all tiers, the two-tier system that we have and how active that is. Half of the mining companies on our big board, I'll remind you, started their journey on our venture marketplace. So quite proud of that, and it stands out. It's a unique two-tier system. So you'll ask yourself, how do you join our market? Well, we provide innovation in that as well. We offer companies various methods of joining our marketplace. There is the initial public offering, which is traditional. And then there's the RTO QT, qualifying transaction, which is the term that we use to refer to our CPC pool, our capital pool company program that we develop for companies looking to replicate the SPAC model. Most people will know about SPAC, the SPAC model on the TSX venture. So, and of course, we have a dual and interlisting method. The CPC, I talked a bit about this, and the CPC is I'll pick that out because you'll probably be surprised to learn that the most popular means, of these four methods of going public on our markets, for the TSX venture, CPC is the most popular used means of listing on our marketplace. And so you're probably wondering why is this? Well, it's companies might want to manage the cost of going public and don't need IPO distribution. So you don't need that distribution from the IPO process. That speeds up your listing process oftentimes as well. In addition, some companies, their projects, their properties, their projects, and often, by the time you get to a point where you're saying, okay, we need to raise some capital to make this into something or to explore this some more, you often don't have the necessary supporting framework around you. And the CPC is a great means of adding that framework. And I say framework, I'm talking about management or investors or directors that you might want on your team and often required on your team to be able to be listed in any public markets, including ours. So that broader framework, the CPC provides quite instantly if you're able to find one and complete a transaction, a merger. And of course, capital, just the immediacy of the capital access and the liquidity that this provides. So a lot to absorb. It is a unique vehicle to our market. And the good news is that you learn a lot more about that. I'll expand on that in a second. In addition to the international listings, I touched on earlier Gatos Silver that did their IPO with us last year, and Newcrest, of course. Gatos is based in the US and their property is in Mexico. And of course, Newcrest is the largest gold producer in Australia. They listed with us, even though they're listed on in their Newcrest, that is listed in their own market on the ASX. But we do encourage companies who are listed in another market or in another exchange that there is a path to list. We welcome interlistings. We welcome companies performing dual listings because sometimes it makes sense. In the case of Newcrest, certainly, and certainly in the case of Gato Silver, which is an American company with properties in Mexico, they wanted to list in NYSE as well, and we welcome that and collaborate quite well with other exchanges to allow companies to do that, and often offer incentives as well, financial, in terms of cost of listing. So you can get more information on that from me if you need. So the dual listing means it's quite it's quite attractive. If you're listed, you can add a listing in Toronto and do more. I keep getting this scroll wrong. Again, the key considerations around listing, I would say, are these five headlines here. The first one is important. There's a minimum property ownership. If you have a project, a property, to list with us, you have to own over 50% of that property. So you have to be majority owner of that property. So at least 50%. So that's significant. And of course, you have to have a management with a track record and experience in the business that they are proposing to do. And as I said, you can add that to your company before you actually complete the listing process. And of course, the sufficient working capital and our mine life. For of course, the mine life part will most likely pertain to companies that are more advanced, more developed, and operating. And of course, sufficient working capital, it would be for explorers and developers. We ask that you have enough capital to perform the work that you tell investors that you will do. Of course, as I said, being listed is often a means of adding that working capital to your business. So that's often the objective with the listing. And of course, the technical report required is a 43-101 report is required to provide protection for our general market and confidence in our market from both investors and the companies who list with us. So a technical report completed to 43-101 standards, National Instrument 43-101 standard is required as well. And the other significant consideration for listing with us will be the exploration and development requirements, or producing requirements. So your technical report often, if you're a developer explorer, will outline your development program. And of course, your finance, your working capital will support that development program. So yeah, those are the five considerations for listing. More detail is available, of course, from us. I mentioned the CPC learning on March 10th. This is Wednesday afternoon at 3 p.m. Our live booth presentation. We're providing a little bit of a learning for a CPC program, a path to listing. We want to go over the what, how it works, and certainly dig in some more into why companies often choose this method of listing and why you should consider it as an efficient means of listing. We're happy to have the live presentation done by Tim Babcock, who is the head and managing director of TSX Venture Exchange. So come, please join us, and certainly fire your questions away. And it's we'll be doing more of education or learning programs with the CPC. We recently revised the program after quite some time. It's been going well, but we updated it. So there's a CPC 2.0, and we'll be doing a lot more outside of the live booth. Later on in the year, we'll be in Latin America. We'll be doing a lot of learnings around this. And the big change with the 2.0 version of it is that I think there's a lot more incentives for foreigners or global investors to participate in the program, in the CPC program, in the sense of not only being companies to the program, but also forming CPCs, as these are shell companies, forming shell companies listed on the venture, looking for a transaction to combine with a mining project and become a listed company. So there are opportunities that are significant with this new program, and you can learn all about it on Wednesday. at 3 p.m. at our live booth presentation. I look forward to seeing you there, and we will have our other partners there as well to answer any questions that might come up. Wrong direction. For any additional information, if there's anything I missed here, or anything you're curious about, or just would like to get ahead in finding out some more, you can of course reach out to me directly at dean.mcpherson@tmx.com. And of course you can take a look at our mining page, which is www.tsx.mining.com, and you'll be sure to find a lot of information. As I said, if you come across anything and any questions or concerns come up and you'd like to get more information, find out more about what's happening in our marketplace, please do not hesitate to reach out. Thank you. It's been a pleasure.
Thank you, Dean, for the presentation on TMX. And so now I'd like to invite Mr. Wilson Brumer, Chair of the Board at IBRAM, the Brazilian Mining Institute, to talk about financing of mineral projects in Brazil, opportunities for all.
Oh, it's okay.
Hello.
Hello.
The stage is yours.
Okay. Thank you, Carolina, for this opportunity. It's a pleasure to speak with you, demonstrating to you what's happening in Brazil in terms of the mining sector, as well the opportunities that, in my opinion, exist here. We are very optimistic about the future of the mining sector in Brazil, based on following points. We have low interest rates in the country today. Structural reforms under national discussion in order to mitigate several bottlenecks that we have in the country. Regulatory agenda and national regulatory agency are undergoing. Expressive expansion of the offer of areas, as mentioned, for mining in almost all Brazilian regions. And the Brazilian government, after many years, have publicly committed to considering sustainable mining as one of the pillars of long-term social economic development strategies. Mining companies are acting concretely and with accountability to the society to raise the bar for sustainability and operational safety. Recovery of a good part of the reputation indicators of the mineral sector since the rupture of tailings dams. We foresee a total investment of the mining sector for the next 4 or 5 years, around $38 billion. It's important to mention that sometimes, mainly in Brazil, we think that most of these projects are concentrated on iron ore production. Part of it will be invested in the iron ore production, but we have to consider that also we are expanding more other activities in the country, as copper, gold, nickel, zinc, and other products. One of the problems that we have is how to increase the exploration programs in the country. Frankly speaking, I have raised the point that we don't know the potential that the country offers to the mining sector. And this perception is based on the concept that over the last few years or many years, companies are not investing in exploration programs, mainly small and medium companies. No doubt that the large companies have their own investments in exploration. But considering the total areas that have been offered to from the government, we understand that it is the momentum to discuss how to finance these exploration programs in the country. And this was the reason by which we signed an agreement with TSX in order to help us to increase the potential mechanisms that exist in the market for exploration programs, as well for the medium and small mining companies. Just for your ideas, we have in Brazil around 6,000 mining companies. Just 2% of this total could be considered large companies. Most of them are medium and small-sized companies. If you combine the exploration programs or the exploration needs of finance, as well the potential that exists to transform these medium companies into large ones, I think the mechanisms of financing this process will be a challenge, at the same time, a great opportunity for investors. In IBRAM, or Brazilian Mining Association, we are composed of around 125 large companies. And we are focusing this moment how to help medium companies to go to the market. And why this purpose? Why this strategy? Because we understand that first, these small or these medium companies are making money. They have a cash flow, they have a BTDA. Most of them don't have debts, large debt. And as you know, the commodities price, the momentum of the mining in the world is a good time to discuss how to increase the production of some minerals in the country. But we have to overcome an old-fashioned culture in the country that most of these medium companies have the concept that the best way is to own 100% of the control, 100% of the shares. I have said that, in my opinion, it's better to pay dividends instead of interests. Interest rate means debt, not necessarily profits. Dividends means profits, which means that sometimes, or most of the times, it's better to own 50% of a large company than 100% of a small company. But it's a changing of culture in the country. And based on this idea or this strategy, we have discussed with the Canadian Stock Exchange as well with the Brazilian Stock Exchange in order to have some kind of partnership, in order to help IBRAM, to help medium companies to visit this new concept. But just this idea or this concept is not based on the idea of increasing the production. One idea behind that is if these companies go to the market, I think you know that most of them have to adopt new concepts in terms of management, in terms of environmental, social support, and so on, which means this is in line with the strategy of more and more transforming the sector as an important area or important kind of business that will help the country to be more developed in terms of social and economic aspects. No doubt, as we saw in the presentation, that there are some Brazilian companies that went to Canada, listed their companies in the Canadian Stock Exchange. But I think it's very important to continue with this process. In my opinion, there are so many opportunities in the country that is financial aspects or financial mechanisms will be the thing that we have to solve. As you know, our country lived for a long time of period based on inflation, which means that most of the investors invested in financial mechanisms. But now, with the interest rate going down, I think it's important for the country, for the investors, to have more alternatives. And these are the main aspects that we have discussed with both Canadian Stock Exchange and Brazilian Canadian Stock Exchange in order to help these small companies to go to the market. We have, in this moment, as was said by my colleagues, a government that has supported the sector. During this pandemic period, the mining sector helped a lot many of the society in which we are located. As you know, we are a large country in terms of territory and lands, and sometimes it's very difficult for government to go to places, to small places where the infrastructure not necessarily is there. And the mining sector helped a lot, this small towns, the population around the mining operations and so on. And in my opinion, this period of a pandemic helped a lot the mining sector to approximate their operations to the society. I have said that today we have discussed certainly the environmental aspects, but more than this, we have to discuss social and environmental aspects. It's very difficult for me to want to consider that companies that will not be worried about their society in which they are located to attract investors. And this is the reason by which I have said that it's very important for the mining sector, for the reputation of the sector, for the development of the sector, as well for the country, to change the culture of many of them, the medium companies, to go to the capital market, to attract equity instead of just that. And this is an easy process. No, it's not easy. We have to change, as I said, the culture of many companies, the culture of the investors, mainly in Brazil. I know that in Canada, Australia, and other countries, the culture of investing long-term exists. We know that mining or investing in exploration means some kind of risks that most of the Brazilian investors not necessarily are accustomed to do. But on the other hand, I think changing this concept and the step by step will get this success of going to this new concept. In other words, to raise money, the necessary money for exploration, the necessary money for expansion, the necessary money for transforming the medium companies into large companies, and the third moment to transform small companies into a medium and in the future in the large companies. We have, as I said, 6,000 mining companies in Brazil, but just 2% of this total could be considered large companies, which means that there is an enormous potential to be discussed and explored in the country. On the other hand, as I mentioned, exploration programs is another way that we have to discuss and to find ways to help small investors. As you know, in Brazil, sometimes the reputation of the sector has been affected by some prospectors or gold miners, as common to say, And there is a confusion, in my opinion, between this kind of prospectors and opportunists people. One thing is to go to some areas and to try to find some kind of gold, some kind of minerals. Other thing is to go to Indian areas or to areas that environmental aspects or effects could be damaged, and to extract or to mine kilos or thousands of some kind of product and to transport it illegally and to sell into the market. We have discussed this with the government. We are against this kind of procedure, and this kind of procedure has affected in terms of negative reputation for the sector. And as IBRAM, as the associates that are with us in IBRAM, we defend the companies that go to the market, that practice the ESG concepts and so on. And this is a great opportunity for IBRAM to incentive people who have the opportunity to assist us and to discuss with IBRAM, to discuss with ESX, to discuss with Bovespa, that is Brazilian Stock Exchange, opportunities. And IBRAM is open to help all these medium and small companies, and also the exploration companies or exploration programs, in order to create an expressive expansion of the sector in the country that, you know, is losing a part of the opportunities to other countries that have good mechanism in terms of financing this kind of companies, as well as to financing exploration programs. I think this is my message to this kind of people who are interested in the mining sector. But again, we are very optimistic of the future of the sector. The sector has contributed positively with many aspects in Brazil, not just in terms of surplus in the trade balance, as well in terms of generating jobs, in terms of creating opportunities for the future of the country, and also investing $38 billion US. That's money not just in Brazil, but also in the world. But again, opportunities are here, and I think discussing together with you, I think it will be a great opportunity to develop more and more the sector. Thank you very much.
Thank you, Mr. Brumer, for your words here today. I really appreciate you joining us here. So without further ado, I would like to invite Daniel Risica, who will be moderating our next discussion. So Daniel is the co-chair of the BCCC and a partner at KPMG. I would also like to invite our speakers as well to join us here today. So Martin Valdez, head of private equity at RCF Resource Capital Funds, Randy Smallwood, president and CEO of Wheaton Precious Metals, Ted McGurk, managing director at TD Securities, Dashni Nadu, director of finance at Vale Base Metals, Danielle Laporta, senior mining specialist, energy and extractivist at World Bank Group, and Hashim Ahmed, CFO at Jaguar Mining. Thank you all for being here today. Danielle, it's your stage.
Okay, thanks, Carolina, and thanks to all my panelists for joining again. As I said a little bit earlier, I always look forward to this every year, and this year we have an expanded panel across Canada, so that's very nice to have this year. So thanks to everybody for joining us. So seeing as we're a little bit behind time here, I'm going to kick it off and we'll get right into it. So Martin, I'm going to start with you if that works, okay? Just to confirm you're here. Can we hear you okay, Martin?
Yes, I'm here, Daniel.
Oh,
how are you?
Perfect. I'm well. How are you? Nice to see you again. And thanks for joining us. As always, it's great to have you here. So I wanted to start off a little bit, just asking you on RCF and Resource Capital Fund, what's going on with RCF in Latin America at the moment. I mean, we changed emails earlier this week a little bit about your projects, but I was wondering if you comment on, just how RCF, given your long history within Latin America, how you're seeing the space at the moment, what you're focused on, what your primary concerns on, and then maybe we'll move on a little bit. I know we changed messages on the gold sector in Brazil, so I wanted to get your views on that as well.
Okay. Well, first of all, thanks again to the Brazilian Canada Chamber of Commerce. I mean, it's always a pleasure to be in this panel, and I think it's probably my 4th year, so I probably am doing something right that I'm getting re-invited year after year. Starting with the first question in terms of where RCF is. Right now, well, for those of you that don't know RCF, we're a private equity firm focused solely in the mining space. We have different funds with different mandates. We have one large fund. We manage around over 3 billion asset under management. We're agnostic in terms of commodity and agnostic in terms of region. So we have done investments in 50 different countries around the life of the fund. Right now we have 3 live funds. We have our large private equity fund, which is sort of growth capital fund. We call it private equity. There we're seeking, we have around $700 million to invest. We're seeking, again, projects that are PFS onwards. We have another one called the Opportunity Fund, which is a smaller type of fund, 110 million, I believe. And we are aiming there pretty much all investments across the development stage. And then we have a venture capital fund. Latin America is quite crucial for the first 2 funds. As I said before, we're agnostic in terms of jurisdictions, but we definitely see a lot of opportunities in Latin America. We are invested in the private equity fund in different countries, Brazil being one. We have 2 investments there right now. We have an investment in Chile, Argentina, Peru. We used to be in Ecuador, Guyana, and Colombia right now. And in the Opportunity Fund, we have investments in Peru, and we have an investment in Brazil as well. We're actually working on an investment in Brazil. So in general, Brazil definitely quite important for us. We see obviously a lot of opportunities coming out of there normally. And we're quite keen in the country. So that sort of answer your question where we are in RCF right now.
Yeah.
I think your second question was before going into the gold space.
Yeah, just to see, like, how has RCF's vision on the sector changed over how has it evolved over the last few years? Because you mentioned before getting into this is your 4th year back here, so I'm curious just to see how the evolution and vision of RCF on the space in terms of opportunities, if at all, has it changed in the last few years?
No, definitely. I think well, we have been quite keen on the mining cycle for, I would say, probably 2 or 3 years, where we have continuously been saying that the cycle should turn and try to go into a growth cycle again. And for different reasons, at the end, that has not happened. I mean, 2 years ago was the China-US trade war. Then in 2020 was obviously the COVID situation. So in general terms, I think we have been quite keen. I mean, it has been a really long downturn cycle. I truly believe that if someone is optimistic in any industry, definitely miners were the most optimistic professionals out there. We're always hoping that the next year will be better. And I believe this will be the year. I mean, I think on the back of, and going again to your question, Daniel, I mean, what has changed? Definitely COVID changed the world, and we were quite keen, obviously, in all the stimulus packages that will drive a lot of the economic growth in most of the countries around the world. that will demand a lot of infrastructure spending, therefore a lot of commodity consumption. On top of that, obviously, we're very firm believers about the electric vehicle and the sort of overall electrification of the market, which will is spiking again a lot of commodities, one of them lithium. So in general terms, I believe a new cycle starting. If you ask me in terms of, where do I see copper prices, if we will see them sort of around the $4 level that we're seeing right now, I personally don't see it. They're staying at those levels in the short term, but it will not go back to 3 or 320 neither. So it will be some place in between. I think supply and demand fundamentals of each of the commodities is showing that at the end there is in most of them, the cycle, the growth cycle has started to happen. So we're quite keen. As I said before, we have one fund that it's that we still have a long way to go. We're probably around 30% invested, and we're quite keen. Obviously we have our favorite commodities, which I think they're not different to most of the people that are following the space in terms of battery metals type of commodities. Specifically, I would say copper, nickel. Regarding your question about gold, going there, I think, with the volatility in the market right now, I think gold will continue being a safe haven. So I personally, this sort of drop in the price of gold in the last weeks, I think it will be quite volatile in the next few months. And whenever that happens, and obviously, and especially for those more general funds or the retail investors that at least in Canada, we're seeing them coming back from sort of this flavor of the month that it was cannabis or blockchain. At least we're seeing a trend back to the mining space. They're very driven, obviously, in terms of news in the market. And whenever there is a bad news, and especially again with this algorithm trading, whenever there is a bad news, that definitely has a double or triple effect in the market. That will always have at the end gold as a safe haven. So I personally quite keen on gold, and especially in the next 12 months where we will see a lot of volatility and trying to see how this story about the COVID will end up with the vaccines and all of that.
Yeah, it's really interesting. I always like to hear that. You don't need to go back, or at least a positive story that I think you're telling us here for the next year to come. You only have to go back maybe 2 or 3 PDACs. I remember walking around and it was very somber mood, and maybe 2 years ago it started to get better, and last year was better, although I guess we didn't know what we were walking into. So it's nice to hear, at least on the commodity space, I think you're positive. Maybe the last question, just following on that gold question. I always like to ask this of people. We saw companies like Equinox do it in the last year or so, try to consolidate a little bit of the space. Do you see that as an opportunity in Brazil specifically? To me, it seems like we heard a little bit earlier, I think there was, I forget how many, 6,000 mining companies operating in Brazil, and clearly the vast number of them are smaller private operating companies. So do you think there is an opportunity there?
Yeah, definitely. It goes by cluster or by region, but in the last 18 months, we have seen a lot of opportunities coming out of Brazil in the gold space. And as you were saying, Daniel, a lot of them, by themselves, probably they're not big enough to
move a needle on a large player.
Yeah, and also to make it interesting for the public market. So I think if someone actually can try to consolidate, we see a lot of opportunities of 40, 50, 60,000 ounces, and our view is that really you need to get hopefully above 100,000 to trigger a re-rating sort of in the public space if you're playing again more on the public markets.
Sure. Yeah.
So if there is a clear opportunity if someone can consolidate some of these operations. And again, it goes by region.
By region, sure, yeah.
So, and I know, I mean, a lot of the big mining companies are trying to work on that, but definitely a huge opportunity. I mean, most of the opportunities that we have seen out of Brazil in the last 18 months have been around gold.
Okay, that's reassuring for the Toronto market space anyway, in terms of our gold companies, hopefully. Well, thanks. That's really good overview. It's always nice to get your view. I'm wondering, maybe Randy, if we could move to you next.
Sure. You can hear me okay?
I can, yeah, perfect. Nice to see you again. I was wondering, maybe we can start off with Wheaton's history. I mean, one of our other panelists here from Vale has a connection to you guys, and I think it was one of your earlier investments anyway, or certainly one of your longstanding investments. So, wondering maybe if you can just comment on streaming transactions as a start, maybe for financing companies within Latin America and Brazil specifically, and where Wheaton might see this going in particular in the next year or so, and what type of opportunities you guys are looking at.
Well, it looks very promising. Just, I mean, there's a bit of background, and yes, Brazil is an incredibly important country for us at Wheaton. We started off being very silver focused, and so had lots of focus in Mexico and Peru, of course, created the country our company in 2004, and our first significant gold investment was into Brazil, and it was with Vale on the Salobo mine, an incredible asset. Very, it's a copper mine that has a very healthy gold byproduct, and ultimately we've now completed 3 transactions in Brazil with Vale, all on Salobo, taking it up to 75% of whatever gold comes from the mine. And then 2 other transactions, one in Sudbury, where we got a percentage of the gold from that. And also we've just started taking delivery of cobalt from the Voisey's Bay mine up in Newfoundland. So Vale is a very important partner of ours, and happy to say, one of our strongest partnerships. The Salobo mine, of course, is a copper mine that produces a healthy gold byproduct. And that's really what our business is. That's what streaming does, is that we try to purchase the rights to non-core precious metals byproduct production. And in our experience, the markets out there really, they undervalue precious metals that are buried in diversified companies or base metal focused companies. And quite simply, those metals, those precious metals, are worth more in our company, and hence there's an arbitrage in value. And by sharing that arbitrage with our partners, it allows them access to very competitively priced capital to help build and grow their own companies on a go-forward basis. And of course, it gives us access to some incredibly high quality, high margin precious metals production from these base metal assets. And Salobo is the one asset that we tend to use as an example in terms of the real benefits of the streaming model. Where all together, we invested $3.1 billion into the streams at Salobo, which was about 78% of the total capital required to build Salobo, the first 2 phases of Salobo. At least there's a 3rd phase underway right now. But to date, $3.1 billion into that asset, 78%, and yet we take away, I was going to say 17%, but with today's copper prices, I think it's probably less than that. I think it's probably down around 13 or 14% of the revenue. And that's the huge appeal, is that from a matter of return on invested capital for the Vale shareholders, a stream has made Salobo incredibly attractive, probably one of the highest rates of return on any invested capital that Vale has put into any of its portfolio. And so it's, Salobo is important to us. It does generate about 35% of our cash flow comes from the Salobo mine. And when you consider that we've got 31 different assets around the world, and 24 of them are delivering us metal, it's quite clear that Salobo is our cornerstone asset, our foundation asset. The last 6 months, we have seen a bit of a wake up in base metal pricing around the world, and what we've seen is a shift in our experience. Again, we supply capital to the mining industry, and our hopes are that that capital is being invested into the ground to support growth in the industry. But there's times that we do spend time sort of, you know, providing support to balance sheets and helping them just pay off debt and such. But what we've seen over the last 6 months is a real shift back towards putting money back into the ground, into base metal projects, either lead zinc projects that provide good silver credits, or copper projects that have some good byproduct silver, or copper projects that have good gold credits, and even gold from some nickel assets. And so you know, what we've seen is a huge increase in interest in terms of helping fund development and growth of projects. And Brazil has been very important to us. I can tell you that we've had probably 7 or 8 different projects in the last 12 months within Brazil where we've been putting forward proposals on helping to finance that growth. And you know, I think, you know, Latin America as a whole is incredibly important to us, just because, you know, I think it's one of the jurisdictions in the world where the importance and the value that the mining and the resource industry delivers back to all stakeholders, not just the companies, but the employees, the communities, the governments, through you know, healthy taxation and stimulated economies. And especially in today's world, when you look at the pandemic and the impact around the world, the values that can be delivered back to society through a healthy mining industry are readily apparent. And I have to say, Latin America seems to have a better handle on that than just about anywhere else in the world in terms of that value. You know, I've listened to some of the speakers here before, and you know, we've always felt welcomed in terms of providing support in the resources industry in Brazil. And so we hope to continue to grow our presence in Brazil and in Latin America. I can tell you that it seems to be the focus of a lot of our own growth plans.
Yeah, for sure. That's very true. I was wondering, maybe just to follow on to that, you know, if you are seeing a bit of competition, maybe, I know you alluded to a little bit earlier, but maybe amongst royalty companies competing for these assets, and then maybe, you know, amongst if base metals producers, for example, as you mentioned, prices are rising, if you're competing against just direct financings of those companies on its own. How does Wheaton fit in between those two, I guess?
Well, in terms of sourcing capital, you know, we are a source of capital, but ours is treated as an equity investment. When we invest into a project, we take project risk with the operator. So from that perspective, we don't really compete against debt so much.
Yep.
What we compete against is equity. And I think even with the base metal market, the way it's woken up over the last 6 months or so, or 4 months, even with that growth in the base metal side, shares, you know, the price of shares, the equity markets out there still doesn't trade at the same value that we do as a precious metals company. And obviously the precious metals market has seen, you know, a longer sort of bull run in terms of commodity prices, and we're, you know, we're seeing the benefit of that. And so you know, effectively our cost of capital is still cheaper than the base metal companies from an equity perspective. And so our perspective from streaming is that pardon the pun, but it's become mainstream. You know, there's not a CFO in the world that doesn't consider streaming as a part of the capital solution. Whenever a company has to go outside of its own internal resources to source capital, it has it has to look at whatever options are out there. Streaming is definitely, there's not a CFO in the world that doesn't consider streaming now. And having been with this company since 2004, when we originally created the concept of streaming, I can tell you I spent the first 7 years just trying to explain what a stream was. I think we're past that stage now. And
I can tell you on the accounting side, we used to baffle everybody how it would work. So I remember, nobody knew what it was. Now it's very commonplace for sure.
And so, you know, we're designed and comfortable working right beside debt. And to be honest, any financing package that a company requires should really have a combination of debt and equity to sort of spread out that risk. And we're more than happy to provide the equity side of that equation. And so, as I said, very, very, very active. You know, a good example, a couple of transactions that we just closed last year, the Capstone Cozamin deal in Mexico. You know, people saw the response in Capstone's share price post that transaction in terms of how much how much the stream strengthened their own balance sheet and gave them that extra capacity to continue growing Capstone, and there was a strong market response in support of Capstone. So you know, it's evidence like that that really shows the strength and the value of streaming. It does truly create value where our share price goes up, but their share price goes up too. And so it's there's not many transactions that can actually show evidence of that. A lot of people talk about win-win. We actually deliver win-win.
View it as a complementary, I guess,
Yeah.
way of financing. Well, maybe I can just shift gears a little bit. I know you spoke recently, maybe 5 or 6 weeks ago, at one of our panels on this topic at KPMG. But just, I know it's been a big focus of Wheaton and your role, I think, as World Gold Council president as well, in terms of ESG, and you know, maybe you can just see, maybe you could talk a little bit about, you know, how does Wheaton look at it when they look at making investments in this? Does it form part of your investment decision making criteria? You know, how do you see Latin America, I guess, as a whole in terms of development in that area?
Well, it's incredible.
It's a large region to group it together. I don't mean to, but
yeah. It's important everywhere we operate, not just Latin America. It's important everywhere. Chairman of the World Gold Council, not president. President.
Chairman. Yeah, sorry.
Chairman, I just have to steer the directors and link
fair
up.
enough, yeah.
But as chairman of the World Gold Council, I mean, you know, from the gold perspective, the responsible gold mining principles, which we came out with back in 2019, and the entire, you know, all the members of the World Gold Council have committed to complying with that, and not only that, having third-party audits to ensure compliance and provide that trust back. But you know, really what we're doing is documenting what I believe the majority of the industry has had in place for a very long time. Social license is a phrase that I go back to. Social license is not the permits, it's the right that we have to be a part of society, and it's something that we all need and need to strive towards and strengthen and such. And so, you know, Wheaton, as a streaming company, we don't have direct presence in site, but that doesn't absolve us of the responsibility. If we're receiving a benefit from these resources, we deserve, you know, it's our responsibility, our obligation to actually do what we can to make sure that there's good, strong, sustainable benefits put back into those communities and into the other stakeholders that are involved, and make sure that we do leave a positive benefit at the end of this. And one of the things that's very unique about the mining industry, and I would argue especially in South America, Latin America, is that most of the deposits that we're chasing are in very rural locations. And we, as an industry, have an incredible opportunity to actually, you know, dramatically improve the quality of life in these jurisdictions through increased access to education, to better health benefits, better living standards, better opportunities for people to sort of grow themselves and build their own sustainable, you know, strong existences and such. And so ESG is something that's incredibly important to us, and Wheaton has been for a long time. We are the first of the streaming royalty companies to actually start putting money back into the communities. And in fact, you know, we set aside 1.5% of our net income for ESG commitment. To the communities around the mines where we get you know, where we get our product from. And the way we work that is we partner up with groups like the Vale Foundation, which is an incredible organization in the sense that what you've got is a very large diversified, and maybe I shouldn't talk about this so much. I have a guest here from Vale, but you know, a big diversified company like that, to have the Vale Foundation, which is organized on making sure that they deliver the best and effective way back to the other stakeholders in these communities. It's probably, you know, one of the most effective methods that we've seen in the industry, and trust me, we do see a lot around the world. It's one of the advantages that I think we have as a company, is the knowledge that we gain from reviewing numerous projects around the world and looking at what works and what doesn't work and what works better and so on. And so the Vale Foundation, you know, it does the same thing. It's gathering everything from their sites around the world and making sure that they do the best. And we partner with them in terms of funding a number of different programs. You know, even in the context of last year with the pandemic, where, you know, the mining industry, it doesn't take much to look around and recognize that we in the mining industry have actually done relatively well. I say relatively well through this pandemic compared to anyone involved in tourism, anyone involved in retail, anyone involved in that side. There is a lot of people that are suffering through this. And so we more than doubled our budget last year and put a specific focus on frontline support to try and help mitigate some of the impacts and manage the risks in these locations. And some of the stuff we did down in Brazil, I know we funded a mask making enterprise up in northern Brazil, and where again it was helping not only create employment and stimulate some economy, but it was also providing a service to some of the locals in that area in terms of again minimizing risk. And so the industry as a whole just has to get it has to get better. This is a journey, right? I hate we constantly look back and critique what we were doing 30 years ago. Well, I guarantee you 30 years ago, we thought we were doing the right thing then. So this is a journey, and we have to constantly learn how to continue to improve, how to lessen our fingerprints and our footprints, and how to make sure that we maximize the benefits that society as a whole, and it's not just us and our shareholders, society as a whole gets from extracting these resources. And we just, that's the only way we're going to be successful. And so it's a real heavy focus everywhere in the world. But I think in Latin America, I would say that we really have a great opportunity to make big differences especially in rural locations.
Yeah, I mean, I've been to Salov myself and Carajás as well. We'll get Deshni to speak about it in a little bit here, but it's not hard to see the impact and the positive impacts it's had on the local community there. And I think you're definitely right. I mean, I always say this to people I speak with as well, that mining companies have been doing this forever. I really liked your explanation there about how it's a continuous process. I think that's very well said, that we've always, for the large part, been trying to do the right thing and get it right. And now, this more focus on ESG as a broader concept is really just a bit of a improvement in our marketing and as an industry, because like you said, I think we've always been trying to do the right thing to the best of the ability we had at the time. So well said.
Never rest on your laurels, always look.
Yeah, exactly. It's a continuous process forward. Exactly, completely agree. Okay, well, thanks for that overview. I think we're going to shift directions a little bit here. Deshni, are you able to hear me okay?
Yes, I am, Dan. Can you hear me?
I can, yeah, perfect. Okay, well, we've been talking about you behind your back here for the last 15 minutes, so we're now going to give you the floor to help us out, and recognizing you're fairly new to Vale, so we'll keep that in mind. But we heard early in the space from Martin, I think a bit from Randy as well, just about the copper and nickel activity in terms of pricing lately. I was wondering if maybe you could comment on Vale's strategy around this. What's the expansion strategy? What's your views on the projected demand for the EV market currently? I mean, I've worked with you guys previously in the past, and I remember listening to Vale has a whole department about projecting prices. So I'm curious to see where you guys where you see it at the moment.
All right. Thank you. So good evening to everyone from South Africa. As you mentioned, I am relatively new in the business, but very excited that this is my inaugural PDAC for the company. And I'd like to also acknowledge our host as part of this. So, okay, Dan, it was fantastic to hear, Martin and Randy touch on some of this as well. So, I mean, in terms of the copper and nickel markets, they have definitely started to price in a positive view on where both of these commodities are going. If I just looked at some of the past data, over the last 6 years, the nickel prices have averaged around $12,000 and copper just under 5,900. At those levels, I think we were all sitting and also, coming out of quite an interesting period at the time where, the balance sheets were trying to get deleveraged. But coming out of all of that, I think we knew that the market wasn't telling us that there's going to be a structural shortage in these commodities in the short to medium term, right? At these prices, and I think we've seen nickel in the last couple of weeks. I'm not coming back to volatility. I'm not looking at the nickel price over the last few days. So looking at the 18,000 that we touched a week or so ago, and looking at copper now just under $9,000. What it's starting to tell us is that the market is definitely pricing in this need for additional metal on the back of future increased demand. So you asked me about EVs, and on EVs, I mean, the market positively surprised us last year, right? In terms of producing just over 3 million units of EVs, and that's on the back of tremendous growth that we've seen in Europe and China. We did overlay what that actually meant if you looked at government stimuli, etc., to actually promote that. But what it's showing us, I think, more from a consumer perspective, that it indicates that there's a faster than forecast transition likely on the horizon for EVs, right? And on the back of that, when I re-looked at the numbers for this year, I think the teams are now forecasting somewhere around 4.5 to 5 million, units of EV this year, and in the longer term, a growth of close to 25 to 30%. So definitely something that we need to look at. But if I turn this now to Vale base metals, and where we are in terms of nickel and copper markets, and where we see this heading, I think in the short term, right, because we do definitely see a bit of a mismatch between what the equities markets are telling us and commodities markets right now. So in the short term, we're still forecasting nickel specifically to be in a bit of a deficit to a balanced market, or into a surplus into a balanced market. Copper, I'm watching closely. I think it's difficult to call this one against what we're seeing on prices just yet. So how are we responding? I think like every other nickel producer and copper producer right now, we're looking at how can we explore different ways to shift our product mix in the short term, right? To adjust to what we're seeing in the market. If you look at the three segments, we're looking at the nickel market specifically in terms of stainless steel, in terms of high value, which includes our traditional class 1, class 2, and then into EVs. So in the short term, we're looking at some of the changes that we can make to our flow sheets, etc., to deliver into a difference in the product mix. And then in the longer term, we're looking at how can we leverage the different assets that we have across Indonesia, Canada, as well as Brazil, to look at maybe some of those more structural changes that we can make in anticipation, but also working with the end users of how the market will structurally change demand-wise. So I think to put it in a nutshell, Dan, we're incredibly busy looking at how we can, leverage current opportunity, but how do we set ourselves up for the longer term, right? You also touched a little bit, I think maybe I can't talk about EVs without just acknowledging the role of copper in EVs, right? Yeah. And the reason for that is, we just don't see, copper is just not a play in the actual batteries itself, right? Copper is a play across the entire EV value chain. And interestingly, I read a couple of days ago that, if that in that segment alone, copper by 2030 at these types of numbers could need at least 3 million tons on its own. And that's what we're starting to see the market price in. It's not just the use of nickel and copper into batteries, but copper's role in the entire value chain. You asked me a little bit about what's happening within the company in terms of growth, etc., and where. When we have quite a prized organic growth pipeline. Like every other major right now, we are re-looking at it and looking at how can we reprioritize some of those projects. But as you know, we've got quite a few projects in execution as well. As we've mentioned, our Salobo 3 project in Carajás. It was fantastic hearing Randy. In fact, Randy, I could have kept quiet at some point, just let you talk about what we are doing in South America. And then, of course, close to home in Canada, we do have the Voisey's Bay mine expansion, which is a nickel project, as well as the Sudbury Copper Cliff. I think interestingly, and you would have heard Mark and some of the other executives over the years, the last 3 to 4 years, talk about the rest of the projects, right? So that's Alamau, Cristalino, both kind of replacement and growth projects in South America. Our discovery project, Huhu, in Indonesia, which has a potential to be a real game changer in the industry. And then in Indonesia, we continue to work in Bahodopi and Pomula, both JVs that we are looking at in terms of local, well, either China companies or Japanese companies. But in a nutshell, I think we're very busy. looking at the the organic pipeline of projects that we have, and in terms of external opportunities, I mean, we'll always be interested. Who will say no, right? We'll
Yeah, for
always
sure.
be interested, but I think what we are looking at more selectively this time around is maybe more partnerships in the industry, as opposed to trying to go after some of the external opportunities on our own.
Okay, well, I mentioned a little bit earlier you're new to Valley, but you're certainly not new to the industry. So I was wondering, we're talking about the increasing prices at the moment, and we heard a little bit earlier as well. It sounds like everyone's expecting or hoping at the very least for it to be a positive next year and the beginning of possibly a next super cycle. I was wondering if you could just comment around, what have we learned from the last super cycle that we could apply currently in terms of operations? And you mentioned a little bit about Vale prioritizing its capital. Maybe you can give your experience on that from your past role and now coming into Vale in your current role.
I think maybe at the start. So I liked what Martin said. Let's not call it a super cycle. Let's call it a potential growth cycle.
I bit my tongue a little when I said it.
Let's call it the imminent growth cycle.
Sure.
Yeah, I think what's different at the start, though, Dan, is coming into this, right? Previously it was on the back of the activity we saw in China. Some of the companies actually responded too late, and that is what actually tripped us up, right? I think this time around, people seem to be taking, and something I mentioned earlier, seem to be talking about the potential for an actual supply or physical tightness without there being one. So I think that is a bit of a difference. But on the back of very few discoveries, major discoveries in any of these commodities in the last 4 to 5 years, as well as on the back of very few M&A activities, in the last couple of years. And I did wish the industry did more last year, right? That would have been a fantastic opportunity period. And on the back of these high prices, I think we're coming into a very different scenario starting this, right? Because we have cash, something we didn't have access to as much before. And to Randy's point, I think it's, all markets are suddenly available, not just specific markets, and they're very competitive. So I think that's the difference in terms of landscape. So the question about how not to waste the opportunity that we're likely to be seized by, I think firstly from a Vale base metals point of view, we are re-looking at all of our plans. And I think the difference this time around is not just we're looking at the full value chain exploration, we're looking at what we can accelerate from a organic pipeline point of view, but we're looking at it differently in terms of how can we pace or how can we tailor the execution. So not necessarily everything now, but how do we also start to wait for the opportunities that are likely to come a little later on, either midway or towards the end of the cycle. Saying that, I think it's important that all of the majors, in fact, all producers do have a plan and a game plan at that, and a roadmap, like I've just indicated, looking at the right opportunity and how to make it work. I think given the long lead time of mining projects, it's important that we make decisions as early on in the cycle, possibly now, right? That would help. Don't go it alone. As I said, I think there's definitely an opportunity to leverage partnerships or create the opportunity for partnerships. One of the lessons we've learned the last time, and I really wish we have learned it this time around, is how attractive marginal projects start to look during this kind of period. And I think the caution here is to don't overpay for those marginal assets, and maybe on the back of that, start to create these inventory lists in terms of how to rate rank these types of assets. And then, value isn't created by approving a project. Get the execution right. So again, a lesson learned from the previous time. Let's set up these projects for success. Coming back to the question of ESG, mining has changed from the last time we were trying to implement projects, right? So now, successful mining companies are only going to be companies that are, far more inclusive to a broader stakeholder group. So with all of these emerging themes on ESG, decarbonization, electrification, more stakeholder engagement, digitalization to, D&I, more diversity and inclusion. I'm also going to caution companies to say, well, if you're going to build a project today, make sure that it's built on a blueprint that actually reflects the mining or the mining company of the future. And then the absolutely last thing on this one is maintain the discipline. So I basically said the picture of which we're coming into this. We've got delivered balance sheets. We're starting to return capital to shareholders. I mean, this was the last year was a record year for dividends. So let's continue to maintain that discipline. I think the one way of doing that is almost diversifying the how we go and fund some of these projects. So that's how I would summarize it, Dan. Exciting.
No, that's great. It's a really good overview. It's always interesting to hear what Vale is doing, how they're expanding their operations, and just given the sheer size and importance of it to both Canada and Brazil, it's always very relevant to everybody at the Brazil-Canada Chambers. So thanks for giving your oversight on that. I think it looks like we might have Ted back. I don't know, Ted, are you...
Well, I don't. Did that work?
Yeah, that worked. Fantastic. Okay.
It's hung up and redialed, but it seemed to do the trick. So
it's the IT help desk solution. There you go.
Yeah.
When in doubt, turn it off and on again. Well, I guess we're going to switch areas here. Ted's from TD, so I'm wondering maybe if you could just give us what I always like to get out of TD in this panel in the last couple of years that you guys have participated is really just a current state of the capital markets as you see them at the moment, and in terms of, I mean, it's a mining finance panel, so mining finance, but certainly not limited to that. I know I understand you're from M&A as well, so maybe what you see a little bit on that. If you could just maybe start with a broad overview for those of us here.
Sure, happy to. And it's been alluded to previously, but there's just a lot of volatility out there. If we start on the gold side, on the commodity side at least, everyone has an opinion, but I'm not sure that anyone sort of really knows what's going to happen. And really, it's a question for macro economists. We're trying to figure out what's going to happen. We have this standoff now between the markets and the Fed, and when they sort of move on interest rates, that'll be helpful for gold. But there's so much out there. Like we're getting ready to come out of this pandemic. We're not there yet, but people are starting to get ready. But we've got, I heard the other day, 20% of the money in circulation in the U.S. was printed in the last year, and we've got trillions of dollars of stimulus packages coming forward in the next year. So no one really knows, how that's going to affect the gold price. And so that's sort of this underlying uncertainty out there. And it's $1,700. That's a pretty good price. We would have, you said 3 years ago at PDAC, it was pretty gloomy. People would have killed for that price back then.
Definitely.
But now it's off, a fair bit from where it was. And then if we look at the gold companies, they've been pretty well behaved and are doing what investors have asked them to do. They're stable. They've fixed their balance sheet. They're returning capital to shareholders. And those are all the things that have been requested of them, but they're not really getting paid for it. They're not really seeing it in their multiple. And so the question we're asking is, is there a market for the stable dividend-paying gold company without growth? And so far, it doesn't really seem to be there. So how do we get the gold companies back into growth? And Dashti made the point earlier, like we don't want to see people get irresponsible and paying high premiums and making the mistakes they made in the past. So what do they do? And we've seen some logical bolt-ons get done, and we'll continue to see those, but there aren't that many of those logical strategic fits for small bites. So, and the gold companies have tons of cash and debt capacity. So, where I get a little concerned is how long do they get frustrated till they get frustrated and start lashing out a bit? At TD, we're pretty big believers in the low premium or zero premium mergers. We think that that's a good model that gives good value to the shareholders and avoid some of the mistakes in the past. Mm-hmm. But if a company has cash and debt, they can do an accretive transaction, at almost any price. So we hope that the discipline remains. But, and to your comment, Dan, I mean, the market as a whole, we always sort of think about mining. We have an IPO market today that in Canada we have not seen for 20 years. The IPO market for ESG-related companies and tech companies is the busiest I've seen in 20 years, and that's all competing for growth capital. And so seeing a lot of the generalist investors sort of really, really focus on that. And that affects M&A. With that kind of volatility, it takes some of the confidence out of the boardroom to do something when you're not quite sure, where the gold price is going to go. So, part of that's exacerbated by COVID. It's been harder to do site visits. We're starting to find ways around that, whether it's getting local people to do it, local engineering firms, private flights, and just taking the hit on the sequestration afterwards. But that's definitely slowed things down. On the base metal side, it's probably a bit easier. You see the standard supply demand fundamentals, and other people have talked to it, so I won't go into it, but you've got the whole ESG theme here, and I think that's really got people excited about base metals again. I worry the ESG is going to be a little slower to fill out, and we've got a bunch of capacity coming on with some big mines like Ivanhoe and Spence, QB2, Grasberg ramping up. So, but I think we're in pretty good shape there on the copper side, and I think our investor clients are quite focused on that space that they haven't been in a long time. I've been predicting copper to go up for the last 5 years, and I'm finally kind of right, but it's taken a long time.
That's good. Maybe I can take it back just to the junior mining space a little bit. We've had a number of people involved in our event this week in the junior mining space, and we heard a little bit earlier that companies are starting to do the exploration work and the drilling work. Has the money returned for the junior miner? Is it going to stay? I mean, I echo your sentiment. We've been extremely busy with new IPOs of mining companies, so maybe I'm answering my own question, but I'm curious to get your view as well.
Yeah, I think it's tougher for the juniors for sure. And there's been, I did a little bit of math, so there's been 15 deals over $20 million so far this year. And 5 of those were in the lithium battery metal space, and 6 were in precious metals. But of those 15 deals, 3 were 37 million or less. And there's probably some under 20 million that we don't really track. But so it's, the junior space is tough. Like, we're finding a lot of the majors are spending time drilling rather than looking at sort of the junior explorcos. And we don't see a lot of acquisition spec in the junior stock prices today. Mm-hmm. And we're seeing a lot more. We're starting to see the drillers maybe come back because they're getting some of that big cap money in to do the exploration. For the juniors to get a financing done, they need something. They need to be able to articulate that growth strategy. They need to have a new management team. They need some new excitement to get money in. I think the same old story is a pretty tough sell, even at these levels. The other thing that hurts them is this move to passive money. We have so much money going into the passive money, which causes sort of good and bad companies to rise and fall a bit together. There is a benefit to size, and we see a real bifurcation of multiples between the big caps, the mid caps, and the juniors. So it's way better for the juniors today than it has been, but I still think it's the tougher place to be for sure.
Okay. On that note, and talking about drilling, this ties together perfectly, but just from an investor perspective, I'm wondering if you could talk about, what kinds of technologies you guys are seeing mining companies have implemented prior to making these investments. I know when we talked the other day, you're mentioning it's becoming much more important from the investor's perspective that mining companies are implementing technology to attract the investment. I wonder if maybe you could just talk about your experience in that.
Yeah, sure. And I'd say it's more related to the M&A side than necessarily the financing side. Okay. But, we're seeing more and more now in our due diligence looking at on the mining side, whether on the buy side or the sell side, is the acquiring companies are really focused on what is the target doing from a tech side, whether that's, autonomous vehicles and hauling, whether it's, optical grade sorting, whether it's predictive maintenance and AI. We're really seeing a lot more focus on that than we ever have before. Mining companies, it's hard to get synergies out of, just given the fact that they're usually geographically not side by side, but so a lot of people are very focused on this tech side, and part of that I think is the green initiative of trying to be a bit more efficient and cognizant of what the market's looking for. But again, I've never seen more emphasis on the technological innovation when we're doing our due diligence.
Okay. Well, then lastly, I guess maybe I'd like to get your view just on if TD has a view, or whether Latin America, Brazil in particular, is continues or is an attractive jurisdiction for mining investment? I mean, generally, I know money goes where the good projects are as a whole, but maybe just current views on Latin America and Brazil, if you could.
Yeah, I think for sure the Americas is where, you know, most of the North American investors are looking. I think when you get into Africa, it's a lot tougher. We lose a lot of investors here compared to some of the European investors. You know, but I think, you know, Latin America isn't all one country, right? I think there's definitely again you know, listing of where people would rather invest. And you said it. I mean, people are looking for the good projects, so it's going to have to be really good to go to some jurisdictions. But you know, I think Brazil's at the top of that pack. I think it's generally considered a good place to be. I mean, Ero Copper had, you know, a premium multiple for a very long time. It's still have a premium multiple. It's not quite as big as it was, but they had an outsized multiple, and you can't do that if people don't like the jurisdiction. Yeah. So I think Brazil is a fine place for people to be.
No, it always bugs me when I see, I don't know if you were on the call earlier, but when I see Dean's slide from the TSX and we have only 36, I think is the number of listed mining companies on the TSX with projects in Brazil versus, I think Argentina has more. So I'm going to bring that back to a soccer rivalry there if I can, but hopefully we can continue to get that up on the Brazil side. So yeah, that's good. Well, thank you very much. Maybe if I could move on to Danielle now. I can see you there. Hopefully we can hear you okay.
Yes.
Okay, we're going to again shift gears entirely here. We have, like I said at the beginning, a completely diverse panel in terms of backgrounds here. So it's great to get all these different perspectives. And as we mentioned, I think you're from the World Bank, and I think maybe I was wondering if you could tell us what the World Bank sees in terms of you know, sustainability. We've been talking about it quite a bit today, but in terms of best practices and what you're doing to help your clients and you know, how to turn these initiatives into the best possible practices that companies can implement in order to attract investment. Maybe you could give a bit of background on what you do at the World Bank as well, just because it's divided into various groups, I know. So just to clarify for people on the webinar also.
Thanks, Daniel, and thanks so much to the Brazil-Canada Chamber of Commerce for inviting me to speak here today. Yeah, so I'll shift gears and talk about sustainability, but very much linked to financing and how does all this come together. I mean, we heard a little bit about ESG and increasing ESG requirements for the mining sector. But before I jump in, so I'm with the World Bank, IBRD, IDA, which we work with governments. We finance projects and technical assistance to governments. I work a lot. I work in Brazil, Colombia. I work a lot in Africa as well, helping countries structure their mining sectors. So we don't finance projects. The IFC, the International Finance Corporation, which is part of the World Bank Group, is the entity within the World Bank Group that does finance mining projects. So just to give people a little bit of a sense in terms of what I do. But, you know, coming back to the sustainability aspect, I think I'd like to start off by saying that we are seeing a real transformation in the mining sector in terms of sustainability. I mean, I've been working in the sector for more than 20 years and believe that we are on a wave of real and important change. I started my career as an exploration geologist, and now I'm, you know, working on the sustainability space, which is really exciting. A lot of things and a lot of changes. And I think it's fair to say that there are two main factors that have been driving these changes. The first one is really about investor perspective around both reputational and project risk. You know, despite the return on investment, I mean, we've been seeing, you know, we had some of the panelists just mentioned, and we also saw in the headlines, you know, these past weeks around how the mining companies have paying high dividends to their shareholders. But however, we believe that investments in the mining sector have not been following at the same pace and with the same enthusiasm because of the high risks. Yes, there is an increased enthusiasm now. I'm not going to use the term, you know, commodity super cycle. I agree that we need some caution there. But yes, there is definitely we're seeing a trend and a growth trend for the sector. So yeah, it's going to continue, but we believe that sustainability will be in the core of defining how that plays out. And I guess another factor that we're also seeing in terms of sustainability change is consumer behavior and a demand for more accountability on how the minerals and metals that society consumes are produced. You know, the sector's impact on the environment and on climate change is a growing concern for all, but it's also a growing concern for investors. So I think those two factors are very much at the core of defining how we're going to be seeing sustainability going forward. You know, as part of my work at the World Bank, I speak to investors, governments, civil society, and also companies that use the minerals and metals produced by the mining industry. And there is a consensus that ESG requirements alone are not enough to tip the scale. So despite the progress, we really need to go beyond that. And I will get into that in a little. But I believe that is one of the reasons that the mining sector finds itself at a bit of a crossroad where it comes to sustainability. But I believe also that the path going forward is very clear because we can see a response from the industry coming very strong. There is an understanding that business as usual from a sustainability perspective is not enough. Taking the same path will only amplify, you know, the risks and turn away investment opportunities. And just to quote Larry Fink, he said last year that climate risk is investment risk. So companies, investors, and governments, they must prepare for a significant reallocation of capital. And we believe that. And that's why, you know, at the bank, we see decarbonization of the sector as one of the key sustainability issues and challenges for the sector going forward. Of course, that is also associated to other longstanding factors that are key in understanding risks and performance associated to mining projects, and that includes safety, business ethics, and community relations. So management of carbon emissions and broader ESG performance is becoming a competitive advantage for some companies. So there is, you know, as the climate agenda and the climate discussion grows, and governments are really, in a way, failing to meet the ambitious targets that they set during for the Paris Agreement. So there's a growing pressure from investors and other stakeholders for companies to provide, you know, a better disclosure and align strategies and also capital allocation with the goals of the Paris Agreement. So climate change factors have already had a material impact on strategies, portfolio, and even shareholders' registers. So that leads me to a fundamental aspect of this discussion on sustainability, and one that we at the World Bank have been working on the past years, and that is the role mining will play in the clean energy transition. So this has brought the world's attention to the mining sector, but with that attention, you know, comes greater pressure on improving sustainability and on doing mining better when it comes to the environment and to people. And I believe it's really starting to sink in that a low carbon future will not be possible without the mining sector. The clean energy transition is very mineral intensive. We need minerals and metals to deliver on our climate goals. I've been a very strong advocate of that. And the World Bank has published 2 reports on the mineral intensity of the clean energy transition. Huge growth in demand for critical minerals just from these low carbon technologies alone, such as wind, solar, batteries. So that is going to be a key driver for defining the sustainability agenda as well. Because, you know, as we seek to deliver a better world, if you may, with the clean energy transition, the mining sector will play a huge role in that. And that alone helps shift a little bit the narrative of the sector. And this is something that we have been trying to advocate and have people understand a little bit better what that means.
Yeah, that's really interesting. I think I may get the investor wrong. I think it was Robert Friedland published or spoke about it. I read, may have been recently, may not have been, but I think I read about it a week or two ago, just saying that the EV market in general, exactly as you pointed out, is mineral intensive and is going to require a bit of a reckoning of that and alignment of strategies. And I think as Randy mentioned earlier, continuously moving forward to meet the expectations of people and investors, quite frankly. So yeah, I think that's real interesting. It's interesting to hear that you guys have published papers on it for a long time now. Curious to go back and have a look at those. So.
Yeah, definitely. But according to our estimates, we'll need 3 billion tons of minerals and metals to deliver on the low carbon future. That's a lot.
Which is good news for
it's good
those
news.
of us involved.
Yeah, for sure.
Okay, well, thanks for that. Maybe just in interest of time, I wonder if we can move on to Hashem now. Thanks, Danielle. It's a really interesting overview and a different perspective as well to get from you guys. So thank you very much for the overview. Hashem, can you hear me okay?
Yep, I can.
Perfect. Okay. Well, I'm going to take it back a little bit. So we have Jaguar, who's, for those of you who are not familiar, maybe have recently in the last year or so, given the performance of the company and the share price, but you've been on the ground in Brazil for quite a long time now. I'm just wondering, maybe if you give a little bit of just the history and some of the lessons learned in Brazil for those of us on the video conference who are, interested to invest in Brazil, operate in Brazil. Just maybe a bit of background from that perspective, if you don't mind.
Thank you. Thanks, Daniel. Well, Jaguar has been on the ground since past 15 years. So it's been a long time now. I've been with the company for the past 5-6 years as CFO, and definitely the day I joined, from then until now, there's been a whole journey. But a lot of lessons learned. I think at the end of this, I probably could write a book on it. But I think starting with some of the summary messages that we can relay to our listeners is, whenever investors go to a South American or any continent except North America, usually you have a mindset that, this is how it happens in North America, this is how we will do it in Africa or South America as well, which was probably the same premise which original investors had for Jaguar. And when I joined, most of the legacy issues were resulting in pure non-compliance for some of the laws and regulations, for blatant non-compliance. So in the past 5-6 years, we've been very diligently working on fixing those legacy compliance issues, as simple as not following, some of your labor payments to your workforce. So, I think that's one of the lessons learned. No matter where you go, you have to get in depth with the local laws and regulations and respect that from day one. The other thing we've seen very positively happen in Brazil in the past 4 or 5 years is the local labor and tax regulation is becoming way more forward-looking than it used to be. And I think that attracts a lot of new investors, or should attract a lot of new investors. If I remember 5 years ago, you had a risk of litigation from every worker, and then your indirect taxes, VAT, would get stuck up in your working capital for a long period of time. And those headaches, I'm very glad to see that those headaches are slowly starting to go away through the local legislation, which has been made very, very attractive for investors. And I think if we see that trend going on, followed by a reduction in corporate tax rate, hopefully, we should be seeing a lot more investors coming in. One of the other things we've done in Jaguar is, instead of having a lot of fly out workforce from around the world, we've been working and focusing a lot in developing the local workforce, investing in management positions who are people who are Brazilians, because if you're working in Brazil, you want the workforce there, and that's no better investment than that. So we've done a lot of work there, and a lot of return on that investment has come through in the past 2 years in the form of commitment from your workforce, as well as people feeling proud of the organization they work for. And lastly, not least, but probably one of the major things we've seen is environmental, and especially around tailings management. It's become a hot topic in Brazil, and I think companies that are investing in smarter technology in tailings are just going to have a more long-term sustainable business plan. That's just the way it's going to be.
Yeah, for sure. I'm wondering maybe as well if you could talk about, you spoke a little bit about taxes and litigation in Brazil, but I think really, what you guys have done, I think is created processes to address those issues. Maybe you could just give some of our listeners here a bit of a background. How have creating processes within your company, allowed you guys to be successful in addressing some of the issues that are typically faced?
Yes, and I think very valid point. Historically, a company like Jaguar and some other companies, what they've done is, if you've got labor litigation risk, you end up hiring a bunch of lawyers to defend you. We didn't take that approach entirely. We actually said, let's find the root cause of the litigation and fix it. And if it's something that's vague in the law, let's side on the side of conservatism and create our own HR labor processes that comply with those laws. Like, for example, there's a mixed shift law in Brazil, which whereby people can work underground and above the ground, and there's different pay rates for that. And we created classification. We said, certain people will work above the ground, and certain people will work underground. And that formal classification and acknowledgement was all we needed, instead of having litigation against us. So a lot of processes have gone through. And on the other side, recoverable VAT tax was a big issue in Brazil. But you've probably seen, a lot of recent legislation has come up, which has made it easy for us to use those credits against income tax. Jaguar has been, for the first time in past, I guess, decade, is now paying income taxes in Brazil because of the profitability we are seeing. So it's very useful for us to utilize those credits and not be in a tax cash payable position.
Yeah, I think that's a good point. I mean, I can tell you, it's certainly been moving in the right direction, right? I mean, we saw the labor laws change probably 4 or 5 years ago, and that's starting to work its way through. And then with the VAT issue of just collectability and timing of the collection, and quite frankly, the complexity of it. I always joke that, at KPMG, it was the only place in the world that our tax departments were 3 times the size of every other group that we have within the firm. So, it's clearly reflected of the complexity. But fortunately, it's been changing for the better over the last few years, I think. So that's good to hear. I guess lastly, and just as we're coming up on time here, I wanted to just get your view. I mean, I know you're quite passionate. Jaguar is based in Belo Horizonte, which is, for those of you who don't know, it's probably the most unknown 6 million people plus city population in the world. So it's quite a metropolis. And I just wondered if you could talk a little bit, we talked about technology, but just what's going on in the technology space locally in Brazil for people to be aware that there is quite an active space going on there. And it's actually quite exciting. I mean, we've had them speak at our events before, but for those that haven't heard, maybe you could give a quick overview.
So absolutely, one of the things which we face as a challenge being a junior mining company is we don't have access to the amount of cash or funding to buy, for example, in autonomous vehicles and invest in that kind of infrastructure. So what we are doing is we are looking at a lot more at data digitization and automation of a lot of analysis. And we said, what, instead of going for the big boys who are doing these at much higher cost, we went to the mining mining IT hub within Belo Horizonte city. And I must tell you, I was pleasantly surprised, overwhelmingly surprised at the amount of, technologically adept workforce of Brazilians, young Brazilians who have really out of the box solutions for the mining industry, millennials and even younger who are bringing in $100,000, automation, digitization solutions that the mining industry can really adapt. And so we started working on a lot of those solutions. And there's actually, for some people also, there's also a lot of investment going on by the mining companies within Belo. We've created a mining hub where we exchange technology ideas for the companies that are operating in that region. So it has been an amazing journey, not only to find out that you've got, almost a Silicon Valley replica in Brazil, but the level of knowledge and enthusiasm of the local workforce on technology has been amazing. And we've utilized quite a lot of that at very low cost. So, sustainability can be answered not with big bucks only, it can be answered with small money as well.
That's great. And at current exchange rates for those selling gold in dollars with costs in reais, it's even more favorable. So it's good to hear that you can get really good quality solutions there. Well, I think we're up against time here. So we have one quick question, and Dash, it's for you. I'm going to ask it. I'm not sure that it's necessarily a Vale base metals question, but the question was, Vale exports its manganese ore, I believe, from Brazil through a third-party company. I don't know if this is outside your scope. From recollection, this is a Brazil-specific thing, but they were wondering if there's any current and future strategies to offer manganese ore for export to other players outside of this one. This seems like some pretty detailed knowledge here.
And I think for everyone's sake, I'm going to say I know nothing about that.
Yeah, fair enough. I had to ask, but I suspected so much. So then last, I guess I'm just going to leave it off with if anyone wants to take, I always ask, any predictions for the mining space in Brazil in 2021. If anyone wants to take that, and then we can call time here. Any takers? Martin, we haven't heard from you in a while.
Yeah, no, definitely. Booming year, as I said before. I think we're quite keen in the mining space, and the cycle is forming again. So definitely quite keen in opportunities in Brazil.
Perfect. Randy, do you want to weigh in on that, or you're on mute? There we go.
Trained by now after a year of this. Hard assets are going to become even more and more important in society as we go forward, and access to that. And that's what copper is, whether it's in the ground, whether it's going through the smelters, whether it's, that's what gold is, that's what nickel is. And Brazil has a wealth of that. And so, I really do think that it's just going to become more and more important, just having that wealth of resources. And as long as we're wise in terms of how we develop those resources and make sure that we provide balance and constantly push that forward. Brazil is in an excellent position from that perspective, and so I do think that it's going to be a good, strong period where those kind of assets are just going to drive value.
Great. Any other takers on that? Anyone else want to weigh in?
Yeah, I think Dan, we can't have a conversation in 2021 without talking about COVID and the impact. I mean, the world's going to be building back better. I think definitely the mining sector has a very big role to play in that build back better agenda, and closer to home, both in Brazil and Canada. I think we have a huge role to play, and the sweet spot in terms of commodity prices happen to be where they are. So let's make sure that mining is used for purpose this year, to deliver on some of this. And in terms of the opportunities that we're likely to face, the opportunities have to come up, right? In terms of either accelerated organic growth or more on an M&A or partnership basis. Let's keep in mind the lessons that we've learned in the previous cycle to make sure that we can do that. But I think my summary is this is a year for mining, and this is a year for mining playing its part towards the Build Back Better agenda.
Perfect. Well, I think that's about time. I think that's a really nice way to leave the panel. So maybe we can leave it at there. And I really want to thank everybody on the panel for joining. We're all very lucky to hear from each of you. It's like I said, a real broad spectrum of the mining space in Brazil and beyond. So, thanks to each and every one of you for taking the time to speak with us at the Brazil Canada Chamber here today, to our members and those participating by call. So thank you very much to each of you. Carolina, I'll pass it back to you.
Right then, thank you. Thank you everyone for a presentation here today. We still have a couple more presentations to go today, but before we go, I would like to, so we did today, the Brazilian delegation at Virtual PDAC 2021 had the honor to close the Toronto Stock Exchange market. But as you can see, based on how we're dressed right then, this was pre-recorded last week. So I'm just gonna take the opportunity to stream the closing of the market at the Toronto Stock Exchange that happened today, March 9th, as part of our PDAC. Yeah, we had the pleasure to have the presence of Secretary Alexandre Vidigal, Brazilian Secretary of Geology, Mining and Mineral Exploration, who said a few words to some of our partners and sponsors attending the market closing. It was recorded last week, and but we wanted to make sure that we transmit it to you guys as well as a ceremony that happens every year. So next, I would like to invite Nathan Nelson, Regional Vice President LATAM at Export Development Canada and board member of the BCCC, to perform the closing remarks for today's session. So Nathan.
Okay, perfect. Thank you so much, Carolina and the Brazil Canada Chamber. It's a great honor to be able to do the closing remarks. I always think that closing remarks should kind of wrap up the day and make sure that it kind of gives a summary to those that couldn't attend the entire session and kind of captures the main ideas. So I'm going to go back to, I think it was Joaquim Muniz who said, "We're walking in the desert, but we see the oasis." And I think we can probably say that some of us see the oasis a little bit better than others. And I think there's still probably some questions there around volatility and just what is happening. But I think that we can agree throughout the day that there was a lot of comments on seeing the oasis. I think it was really interesting to see, and the remarks that were done by Dean McPherson around, this huge collapse and then this huge growth back, right? A 23% growth back. I think that's also is part of this oasis that we can tie into the day. I really liked what Wilson Brumer mentioned with regards to Brazil raising the bar for sustainability, something that's very important for EDC as well. And I think it was Wilson also, and then Randy Smallwood, who talked about the importance of the mining sector, and specifically Wilson, who talked about actually the mining sector becoming closer to the communities through the pandemic. So I thought that was a very interesting comment, and certainly tied into what Randy then talked about with regards to actually showing the value. The mining sector has actually been one of the sectors that has shown the value, has been able to, I think, comparatively do better for the workers, etc. And then I think this last panel was very interesting, and Danielle Laborda, who spoke to, ESG requirements are not enough, and I think that's definitely going to be the trend. It's something that's very important to EDC as well. And then, mining playing a role in the climate change factor. So playing a more active role, I think, was one of the key topics. And I think just maybe to tie that back and then to explain a little bit about EDC as well, I think the availability of capital and how capital is structured is obviously very important to EDC because we operate as a bank. We're part of the Canadian government, but we operate on commercial purposes, and we've been present in doing business and doing financing in Brazil over the last 60 years. But I would say that financing without the proper ESG policies and mechanisms is something that that can't happen. It's something that needs to go hand in hand, and we're certainly involved in the SLLs, the sustainability linked loans, and other mechanisms. And we're also, I would say, advocating for other banks and for other partners to have those same standards. So I like that was part of the theme, even though that this was a capital markets and a more financial structuring and discussion throughout the day. But those little bits of importance with regards to ESG came through, and certainly that maybe we're on the cusp of something even better. And even better standards, I think, would be fantastic. But the industry in itself has made some incredible advancements. So maybe I'll just leave it there, and I'll thank the chamber for allowing me to do the closing remarks. If you're interested to know more about Export Development Canada, as I said, we're very active in Brazil. You can reach out to me. Our purpose is to provide financial services for Canadian companies that are exporting or investing in all over the world, but in my region, Latin America, certainly very important, and in Brazil particularly because of this incredible day that you've put together. So reach out to us. We'd love to hear from you, and hopefully we can help you expand your business throughout the world, but specifically today in Brazil. Thank you.
Thank you, Nathan, for summarizing so well the discussions today. So we really appreciate your partnership. EDC has been a member and a partner of the Brazil-Canada Chamber of Commerce for many, many years now, and have been supporting a lot of Canadian companies and Brazilian companies to do business. So we appreciate your partnership. And if there's anything you guys need from EDC, let us know. Contact with Nathan as well. They have an amazing team on the ground in Brazil with Monica and Fernanda leading as well. So please let us know how they can help you. And before we go, I'd just like to share with you guys an inspiring interview with one of our speakers today, Dashni Naidu, Director of Finance at Valley Base Metals. This interview was recorded last week, and I was gonna share with you a little bit of her words.
So Dashni, thank you for your time and your participation this morning. To start off, I wanted to ask if you could share some insights about your role at Valley.
Thank you, Brooke. So I am the Director for Finance and Business Development for Base Metals. In the role, I am responsible for the business's financial strategy, planning, forecasting, and also on the investment side for both planning and management of that. I also lead the global business development agenda, and that's all the way from strategic origination to execution. And that includes your traditional M&As, JVs, and structured operations. With the business's leading position in nickel, as well as our significant copper contribution, our scale creates a lot of leverage and exciting opportunities.
Thank you. Now I wanted to ask you, because it's such an important message for us in terms of sharing our stories and learning from each other as we are striving to be a learning organization. Could you speak a bit about any hurdles you've overcome to, one, be who you are, and also get to the point where you are in your role within the mining industry and with Valley in particular?
Thank you for the question. So I entered the South African mining industry as an Anglo-American bursary holder all the way back in 1995. That is just post South Africa freedom. So in a post-apartheid South Africa, that created a very interesting dynamic for me as well. So from a South African point of view, I'm actually classified as a historically disadvantaged South African. So coming in as that, and then when women were severely underrepresented in the industry, certainly created its own challenges and hurdles. So I faced racism, I faced harassment, sexism, and I think in those formative years, also a lot of ageism. I was a young graduate. I focused, in terms of rising above all of these discriminatory factors, I focused on getting the job done. I focused on building a can-do brand. I focused on seizing and, in fact, sometimes creating opportunities for me. But more so, I really focused on the purpose of why I was doing what I was doing, and it was really to create the inroads on the less traveled path for women in the industry, so that I could enable other women to travel this path as well. And I really pushed myself, even against some of those odds, to make sure that I could do that.
Well, thank you for sharing that and sharing your experience and insights. And it really leads into one of my next questions in terms of, we have a commitment to create, and we specifically say an authentically, diverse and inclusive organization. And so I wanted to ask, what does that look like in terms of what you do, and what can other leaders do to really make a difference on this front?
I mean, there's a lot to do in this space, right? In my previous role, specifically, I focused on hard rewiring the business. And that started off with the leadership commitment towards D&I, overall gender diversity and inclusion. But specifically, on women, I did some pretty radical stuff. So I mandated at some point the hiring of women only across the entire business. I accelerated women talent development. And I mean, that was to fill that much needed development advancement gap we see in the industry. I created women and family friendly policies and practices, something I'd love to unpack at some point. I also included gender diversity targets into third party contracts. So not only focus on what we were doing, but made sure that I put third-party contractors under pressure as well. Preferentially selected women-led CSR initiatives within the communities. And on occasion, when I did my road shows on the sites, I actually chose to meet some women only, and especially within the community. So that is what I call the hard rewiring. Don't inundate the initiatives, through the organization. Naturally, or make this a far more organic feel.
Thank you. Definitely lots of lessons for us to learn and share with you and from you in your time at Valley. Absolutely. Thank you. We're going to segue a bit. I wanted to talk about the Global United Nations Women's Theme for International Women's Day. And for 2021, the theme is Women in Leadership. What are your thoughts on this theme?
I love the theme, as I've loved all of the previous International Women's Day theme. The imperative for gender diversity and inclusion is understood, and there's so many facts out there, right, supporting the business case for why this is important. Despite the facts and many papers that have been written, from the Harvard Business Reviews to the many management consulting papers we've seen to the UN studies, we still feel that as a woman, we have to demonstrate that this is in fact the case. So simply put, diverse companies with diverse leadership return better bottom line performance. That's a fact. Okay. So given how mining companies are evolving right now with increased ESG focus, social investing, increased stakeholder pressure, stricter regulations, digital transformation, and now on the back of COVID, the Build Back Better agenda, I believe that mining is in such a transformational juncture right now. So bringing everything together, Brooke, increased woman leadership can certainly create the catalyst for the change that the industry needs right now. So I love the agenda.
Thank you, and we're grateful, very grateful for that, and to have you speak to it as well, especially with all of your vast experience on the front lines, but also at the corporate levels as well. I'm going to jump to the next question because I feel that you've answered, your answer was so rich in terms of what can we do and what did you do to really walk the talk as a leader. And so my final question to you would be, what advice can you provide young women and girls who want to pursue leadership roles in this industry?
Yeah, fantastic question. It's almost like the question that the advice that you'd give your 20-year-old self, right?
Right.
I think the first thing would be dream big. Don't be constrained by thinking, or don't let your thinking be constrained by the limitations of the past, of what women could do, or worse, what they were allowed to do. So dream big. Secondly, mentally prepare yourself to take a career in any direction. Learning and stretching your ability must become a DNA. That's something that I felt very strongly about. Seize opportunities. Women don't seize enough opportunities. So be prepared to seize those opportunities. And as I said, create a few. Don't wait for an opportunity to come your way. Also create a few. Work at home, and I think especially now on the back of work from home, can definitely find some symbiosis. And my advice to young women who also want to think about family, don't think it's one or the other. It can definitely work. I've lived my life looking at an integrated model. I think now, especially with the work from home, that's definitely possible. Think about support networks and think about partnerships in this space. And the last point would be stay hungry, but stay humble. And the purpose is to uplift others, especially women, in this journey.
Deshni, thank you so much.
So I don't know if Dashni is still here today. She is not, but this was such a great, inspiring interview that Vali provided us with Dashni on gender equality and the amazing work that she's been doing in the mining industry. So I would like to thank everyone who joined us here today. I hope you found the content worthwhile and that you're able to network and connect with fellow attendees. It's been a long day. And another big thanks to our sponsors, members, guests, staff, volunteers, speakers, for all their support, for all their sharing, to be able to share all their knowledge and insights with you guys. And if you wanted to learn more about the benefits of becoming a member of the BCCC and how we can support your business, please feel free to reach out to me. And don't forget to follow us on social media to be informed of all the activities and everything that we are currently organizing, not only for PDAC, but also another variety of sectors as well. Thank you, stay safe, stay home, and I'll see you soon.